Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, it's June 4th, 2012. We're going to be looking at the FTSE London Financial Times Index today. Looking here, starting off with the 3-month daily chart. Each one is candlesticks represents 1 day of trading activity. You can see that we're still trading basically sideways right here. That's what's been going on in a lot of the markets we're seeing out there. And today was no exception, still trying to hold this line here. We gapped up from the previous day and then sold off, closing higher than this previous close on Friday, but still not showing any real strength here, like a real bottom, nothing of that nature. It's just fighting here. So let's look at the longer term picture, and I will show you what you're dealing with here. Okay, now we're looking at a 2-year monthly chart. This is a 2-year chart showing every one of these candlesticks represents a month of trading activity, except for the most current candlestick. Of course, this month is still being formed. It's not actually the end of the month, it's just the start of the month. So we don't know how that candlestick is actually going to look at the end of the month. But right now, the main thing I want to draw your attention here is whenever you're seeing individual charts, especially your daily charts, start to act as though there is some kind of a support visible line there that they don't want to break below for some reason. Look at your longer term charts, and typically you'll see what it is that's causing that. And right now you can see that we have the 200-day or 200-period moving average right here, the 50-period moving average right here. You had the previous resistance here that got broke through right there. So these are the elements that we're bouncing on here or finding support at. But none of this information here that I'm showing you indicates that you should be a buyer here. In fact, I would argue that these actual little supports that you're seeing here in the longer term chart are going to break down. We kind of know that anyway, because you can look at the low point here and the lower low here. Even though it was just an intra-period lower pierce, it's still indicative of the actual true direction here, where the strength is growing to the downside. You'll notice this moves to the upside here, and then you get a lower low than you had back here, and then you shoot up there again, and you fail to get as high as you had before, and you get a shooting star formation. So everything here is telling you that this thing is breaking down, which means these supports, when we talk about breaking down in the markets, what we're talking about are supports breaking down. And so this support that we've been bouncing on, we're seeing this fight on, that's what's breaking down in my opinion. I would not be trying to buy this market. But if you keep a stop loss limit too tight to your entry point in this environment, it's quite easy to get stopped out. So keep that in mind as well. Look for a lot more money to be made once you break through these supports, and you'll have a much easier direction and clear trend, and everything else will be clearly going down much faster. And remember that though bulls take the stairs, bears take the window. Looking now at the French CAC 40 index, this one we're already short in this position, but you could actually get this signal here can be an indication of another opportunity to get short if you're not already doing that. And basically I would look for confirmation, meaning that the following day would have to make a lower low than today's low point. If that were the case, then I would be getting short there. This looks like you've seen this big move to the downside here. You may be thinking she's overextended. I don't think so. If you look at the longer term chart, you'll see that this is actually just getting moving to the downside here. Looking at the French CAC 40 index, as far as the long-term picture goes, 2-year, each one of these candlesticks represent a single month of trading activity, except for the most current, of course, because that is still being formed. But the main thing with this chart, obviously, the high point, the low point, the lower series of highs, and now the thing that follows would logically be a lower series of lows. Actually, you've already seen everything except for the fine points of it, because you've already got this high point, lower series of high with a shooting star formation here. Then you come to this low close right here, and you'll see that we've actually already closed below that. And so we'll look at this being already moving in the direction we're calling for, being a lower series of lows here. So expect that to fall below that point there. And with the lower Bollinger Band line 27.29, that is not a hard target for it to reach. In fact, it can undershoot that substantially. So I would just keep moving on the short side here. I don't see any reason to be a buyer. This little sell-off that you had here, you got a little bit of support from previous back there. You started moving around sideways, started getting some signals that could be indicative of a support, and you moving to the upside. That makes sense, and you can trade that there. And then you get that sell signal with a lower series of highs. That tells you got a major problem here. You can't break through the upper resistance line, and you can see that is actually on the 50-period moving average is where you're basically finding that. I would be looking for this to continue to move to the downside. The German DAX composite, we talked about this one on Friday. Told you could be short here. We are not, but you could have had a stop up here, been shorting this guy as he broke down. below this support line that we talked about, and that makes sense to me. I would continue to stay with that, even though you are now trading below the 200 period moving average, which some people would call for a bounce there. I wouldn't worry about it. I would stay on the short side. I know you're also trading below the lower Bollinger Band line that would call for a bounce. Again, I would let it bounce, but I would be looking to stay short. Always looking to trade with the trend. The trend is clearly down. And you also have the ultimate oscillator now below the 30 line, 29.70. When that happens, that's typically where you get those bounces. You've had one back here. You get this little bounce here, here as well, here as well. You know, they don't all work as magical as some would hope, that they bounce substantially. There's overall trend is still down, but you can have counter trend moves here and there. I would stay with this on the short side. If you look at the longer term picture, you will understand why. Okay, this is the 2-year chart. Each one of these candlesticks represents a single month of activity, except of course this one, which is still currently being formed. And this one is obviously in a downtrend. What you have here is a support line, then you advanced here, you found a top, and you rolled over here. Now you have a problem. Your low point is lower than your previous low. Then you jump up here to see if you can regain or make a higher high or something, and you fail there, which makes sense because you've already had a series of lower lows, so you would expect to find lower highs. That's what you get, and now she's rolling over again. The only thing to conclude in this situation is you have to move down here again, test this level again. If you can hold support there, then maybe you can create some kind of a reversal situation and come to some possible reversal from a downtrend to an uptrend. But right now, you don't have that. Right now, what you have is a series of lower lows and lower highs. If you're trading with the trend, that means you're betting that things are going to fall apart, and that's what I would do. Be looking for it to continue to move to the downside, and that's the only way to trade that, in my opinion. Yeah, you're going to have some supports here and there on the way down. You're going to find some up days along the way and trying to get shaken out, but you know, the reality is she's moving to the downtrend here, and there's no argument against it. I mean, it's really simple. And overall, if you look at the Spain situation and the emergency meetings we're having in Europe over those issues, the reality is we can get news much worse than we've ever seen before on this issue. So what I would not be doing is taking long positions or taking short positions off the table in exchange for long positions. If you think you see a long opportunity out there in an intraday period or whatever, take a nibble at that, but keep some shorts on the table, because you can very easily get news out of Europe or Spain or wherever and just be telling you in you know, blink of an eye, oh, by the way, we've had a run on the bank or something of that nature. So that would, of course, have the markets just falling apart that much faster, and I don't want you to miss that. So keep that reality in your mind as being a possibility, something that may happen. So, like, again, the main thing here is that, not what happens here in the U.S., but what's going on there in Europe, all right? If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you in the next video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.